And so before we get into the history, perhaps I'll talk a little bit about this. At that time, we were predominantly a producer economy. We produced more than we consumed. So when you institute tariffs, it's actually counterproductive.
Yes.
Whereas today, we are the reverse type of economy. We are not producing as much as we consume. And again, we look at the history and we see what occurred after World War II. There was the Bretton Woods Agreement where the United States came out standing strong and everybody else was devastated around the world. So we were a production-oriented economy. So we helped prop up the rest of the world. And in the 50s and 60s, we experienced positive economy, strong economy. And then all of a sudden in the 70s, it's tended to change a bit. And there's a multitude of reasons for that. But of course, we experienced high inflation. There was an oil crisis. We also were taken off the gold standard in 1971. But all that period of time, we experienced trade surpluses. Interestingly enough, since the gold standard was removed and the world went on no gold standard and fiat currency and exchanges and open accounts, it tended to change for the United States dramatically, particularly into the 80s and 90s and well into 2000. What occurred in 2000? You had the WTO, the World Trade Organization, which accepted China